Today, we're talking about something that could completely change your financial future: the best investing habits. Now, I know that sounds a bit dramatic, but trust me, these habits have been game changers for me, and I'm confident they'll help you too. But first, let's get this out of the way. Investing can feel overwhelming, especially if you're first starting out. But the earlier you start, the better off you'll be in the long run. So, let's dive into 6 investing habits that will set you up for success. Number 1. Start investing as soon as you can. I can't emphasize this enough. One of the most important decisions you'll ever make is to start investing now. I know it's easy to think, oh, I'll get to it next month or maybe next year, but that mindset is what holds people back. The truth is, time is your biggest advantage when it comes to investing. The earlier you start, the more time your money has to grow, thanks to the magic of compound interest. Let me break it down. If you invest $100 a month starting at age 20 at an average return of 8%, by the time you hit 65, you're looking at almost $540,000. Now, if you decide to wait until you're 25, that same $100 a month will only grow to $361,000. That's a difference of nearly $180,000 just by waiting 5 years. So yeah, starting early matters a lot. Number 2, don't try to time the market. Look, we all have that one friend who thinks they can outsmart the market. They're always talking about trends, watching charts, and claiming they know when to buy low and sell high. But here's the reality. Timing the market is a fool's game. Data shows that if you miss just the 10 best trading days in the market over the last 20 years, your returns drop dramatically. Instead of trying to predict the future, the best thing you can do is simply invest consistently and stay invested. A 20-year holding period has never once resulted in a loss, so set it and forget it. Trust the process. Number 3, only invest in what you understand. This one's simple but crucial. Don't throw your money into something just because your friend told you it's the next big thing. If you don't understand how an investment works, how it makes money, or the risks involved, you probably shouldn't invest in it. Now, I'm not saying you have to be a financial expert to start investing. You just need to have a solid grasp on the basics. Do your research. Know what you're getting into. The last thing you want is to invest in something that crashes and you have no idea why. Knowledge is your best defense against making poor investment decisions. Number 4. Don't invest money you'll need soon. This one's huge. Don't invest money you need in the short term. Markets are unpredictable in the short run. You could invest today, and tomorrow your investment might drop 10, 20%, or even 50%. But over the long term, the stock market tends to go up. So, if you know you'll need that money for rent, bills, or an emergency fund in the next year or two, don't risk it in the market. Keep your investment separate from your short-term needs. This will save you from having to sell at a loss when the market dips unexpectedly. Number 5, diversify. I know you've probably heard this before, but spreading out your investments across different assets is key. It's tempting to go all in on something that seems like a sure bet, but that's a risky business. By diversifying your investments, you're reducing the overall risk. Think of it like this. If you have all your money in one stock and that company tanks, you're in trouble. But if you spread your investments across different sectors, stocks, bonds, real estate, you're better protected when one area underperforms. It's all about balancing risk and reward. Number 6, invest regularly, no matter what the market's doing. Consistency is everything. Don't get caught up in the day-to-day noise of the market. Whether stocks are at an all-time high or low, just keep investing. Markets will always fluctuate, but if you invest regularly and for the long term, you'll be in good shape. There's a study that found investing at all-time highs actually performed better 71% of the time compared to trying to wait for dips. So don't stress about perfect timing. Just keep putting your money to work. All right, Let's recap. Start investing ASAP. Don't try to time the market. Invest in what you understand. Don't put short-term money at risk. Diversify and be consistent. These 6 habits might seem simple, but they've made a world of difference for me, and I'm confident they can do the same for you. If you stick to these principles, you'll be well on your way to building wealth and securing your financial future. So, what are you waiting for? Get started today.